Hello and welcome back to Kyle's Financial News. Please excuse my setup here. I am coming to you today from an undisclosed location while I am on a little 4th of July vacation. So today's date is July 3rd, 2024, and I have some topics to cover regarding the last few days of market action. The 4th of July is around the corner. Markets were operating on a half-day schedule today, but that wasn't going to stop them from making all-time highs one more time this week. The NASDAQ and the S&P 500 both broke into record numbers today. The Dow Jones is just about 2% shy from reaching new highs again. I've been reading a Yahoo Finance article this morning and have some updates from the Federal Reserve. They released the FOMC meeting minutes today for the meeting that took place earlier in June. And there is one particular quote that stood out to me, and that is that, quote, participants judged that although inflation remained elevated, there had been modest further progress toward the 2% goal in recent months. Pretty positive message saying that data is continuing to show better and better, kind of as expected, results towards kind of allowing the Federal Reserve to both ease up on the quantitative tightening, but additionally that the inflation objective of getting it back down towards the 2% goal is going better than expected. So Federal Chair Jerome Powell said Tuesday that the last two inflation readings in April and May, quote, do suggest that we are getting back on a disinflationary path. Officials next meet on July 30th, 31st. It's another one of those two-day meetings, Tuesday, Wednesday, where they are expected to hold rates steady at their highest level in more than 2 decades. And that goes right along with my beliefs in that the Federal Reserve is not yet ready to be lowering interest rates yet. I don't quite agree with the language once or twice this year. If inflation slows, the fact that if is a big contingency on whether or not we can even start lowering rates in the first place. I think it's still too early to be talking about once or twice, especially twice. We can't even start to begin about, discussing about having a second interest rate lowering event or it happening twice without it once happening the first time. So I don't even want to bother with hypothesizing, well, we're going to have 4 interest rate lowering events in 2025. It's just this headline clickbait type stuff. Now, we will have some more data very soon here. Non-farm payrolls are scheduled for Friday, as well as the unemployment rate will be out on Friday. So have the possibility of some turbulence on your radar for the trading session on Friday. Now, interestingly enough, per an article by Business Insider and some data by Goldman Sachs, historically, the first 2 weeks of July are very favorable for the stock market. The S&P 500, for example, typically sees some of its best performances during this period, with July 3rd today historically showing a 72% chance of positive returns. And positive returns we did indeed get today. Analysts expect the S&P 500 could rise by nearly 4% in July, and we are already a solid 1.25% positive for the month. So strong buying as we saw today, and there may be some more to come. I want to read you some quotes from Goldman Sachs Managing Director Scott Rubner, I believe is his last name, is quoted as saying this: the first 15 days of July have been the best 2-week trading periods of the year since 1928. New quarter, Q3, and half year, 2H. This is when a wall of money comes into the equity market quickly. I myself am still firmly confident that there is no reason for strong selling to be taking place. Fundamentally, some of the data that we're getting just does not support panic in the markets right now. Blockchain technology continues to be a strong sector, with companies like Riot Blockchain, MasterCard, surprisingly enough, and Applied Digital Corporation receiving strong buy ratings from analysts. These companies are expected to perform well due to their substantial investments and expansion plans in blockchain infrastructure and services. And let me just reiterate that of all the technology surrounding cryptocurrencies, blockchain is by far and large the most valuable component of it. Now, you can laugh at the NFTs and the meme currencies, and maybe you're not so much even into the cryptocurrencies themselves, but let me assure you that the blockchain technology is an extremely valuable piece of technology that was not previously being widely used in our society as much as it is being incorporated today. And I can do a separate video about that if we would like to know more about that too. So all eyes are on the crypto space currently, as Bitcoin pumped about 5% over the previous few days and this last weekend, and then proceeded to sell all of that off just in the last 24 hours and is about negative 7% right now. Only about $1,000 away from making a new low since May 1st. So we're looking at a multi-month new fresh low potentially coming up very quickly. Lots of commotion still going around Solana as they are filing ETF applications. Van Eck, a popular name in the ETF industry, was one of the first successful issuers of Bitcoin ETFs, and they are currently working on a ETF with Solana. They announced on June 27th that they are currently filing the proper paperwork to do so with the SEC. So we will hopefully have some updates there very soon. That is all I have for you so far this week. I think everybody, traders especially in Wall Street, are excited to go out and enjoy the 4th, have a little bit of an extended weekend, a big long vacation. I know I am. So let's see what markets do this Friday, if anything. Hopefully there's some interesting action with the US data and news events coming out on Friday. Please consider liking and subscribing. I hope you all have an enjoyable weekend, and I will see you in the next video.